Hi guys, Charlie from Cryptolio, and today we're going to be doing a little technical breakdown on BTC after a very eventful weekend and last 2 weeks. We're going to be showing you our anticipation of BTC's demise over the last two and a half weeks. Now, it is a hang on, is my screen being shared? Yeah, I think so. Cool. So this is a Wyckoff concept. Now this is distro one. Wyckoff, little insight into Wyckoff. Wyckoff was a theory based on the relationship of supply and demand. Now it was a way of negating financial markets, and Wyckoff just states that every cause in a market leads to a proportional effect. Take, for example, accumulation, which is just the transfer of whether that be coin, stock, liquidity for that matter, from weak hands to strong hands. Weak hands being general retail investors, and strong hands being institutions, banks, so on and so forth. Accumulation is just the accumulative phase, the shakeout of weak hands before a mark up. Markup is obviously the increase in price. So an accumulation will lead to a markup, the price increases, and distribution leads to a mark down. Now, distribution is obviously what we saw completed on the weekend, completed last week. And then we came into the markdown on the weekend. So accumulation and distribution is the cause, markup and markdown is the effect. So that is a very brief overview on Wyckoff. More can be found on Wyckoff with our partnering company, George Mortimer, and generally just online. So let's get straight into things. We're going to be doing it phase by phase. There's 5 phases: phase A, phase B, phase C, phase D, and phase E, where accumulation, distribution are completed. So let's get straight into things. We're going to play it phase by phase, and we're going to be stopping it and marking it up. So we saw around, when was this? We saw around the middle of February, we saw the rise to all-time. Was this an all-time high? No, it wasn't an all-time high. It was the UT. It was the UTAD. The UTAD set Bitcoin's all-time high. Now this was an all-time high. Just briefly missing 60k a coin. This hole here could be classed as the markup. I'm not too sure if this was accumulation, just purely off the eye. Could have been SC. Nothing. Wait, hang on. SC. ST. AR. ST phase B. So that'd be accumulation 2. Anyway, this is all a part of the markup. So we came into our distro here. So first of all, we had the PSY standing for Plim. I can never say the word. Plim. Preliminary. I can't say the word preliminary. Oh wow. Preliminary supply. So we're just going to label it PSY. Yeah, lovely. PSY. Then we had the BC, which was up here. We had the AR, which was there. Let's just play this into phase B. Oh, stop there, because that is the sign of weakness. BC, AR, automatic rally. AR standing for automatic rally. BC standing for buying climax. AR here was a sign of weakness because this was actually a break on a lower time frame. The sign of weakness is only valid if there is a clear BOS, which was there. We'll mark that up. Now we're in phase B. Sign of weakness. We need to follow. This was the ST. Just briefly coming into phase B. This was the ST standing for. Sorry, bear with me. Secondary test. ST standing for secondary test. Then we followed with a sign of weakness, having a clear break of the automatic rally. The sign of weakness is only valid if it is a clean break. So we have the psych, preliminary support. Apologies for not saying it correctly. It's just my vocabulary. Now, what should follow is the UT that takes the BC. Now, I'm pretty sure, no, it's the UTAD. The UTAD is what takes. We'll just let phase B play out. Now, one thing to note, keep an eye on bullish volume. As we can see throughout the phases, we'll see a decrease in bullish volume. It's just how we distinguish accumulation and distribution, whether it's actually valid or not. So we had here the UTAD, the UT in my apologies, the UT standing for up thrust. Mark that up, UT. Taking out liquidity from the BC. Zoom out a little bit with the UT. Now it should follow with the UTAD and test. So this was Bitcoin's all-time high, soaring above. This literally just broke, tapped above 60k a coin. Then we took just shy of 65k a coin, which is absolutely ridiculous. Let's play the rest of phase C. My apologies. So we had the UTAD standing for up thrust after distribution. We had the test. Can class this as a test. For the purposes, we'll just get rid of the test, even though it is there. So the UTAD took UT's liquidity, massive clear BOS to Bitcoin's all-time high, sitting at, this is on Binance, so, well, on Binance 64, no, just shy of 65k. Then we started phase D. So we came up. So here we come into a nice POI, nice little POI for futures traders. See if it plays out. Plays out beautifully. Should print an LPS. Look at that, lovely. Absolutely stunning. S1 standing for last point of supply. There was another one, this one here. S1. And let's look at the difference. Let's look at bullish volume throughout these phases. From the markup into phase A, we have very low bullish volume, we have an increase on the up thrust. And then from there, we have just diminishing bullish volume. And upon this was a liquidity grab. Upon this absolute move down, when was this? This was 10th of May. Was this the, I'm pretty sure this is the Elon Musk tweet. Not too sure, I can't remember what date it was. I'm pretty sure it was the Elon Musk when he come out and said that Tesla were suspending Bitcoin payment options. Look at the bearish volume. Bearish volume is definitely in control here. So we had the LPS. Now we want to see the take of the sign of weakness in phase B. Let's play it out. Boom. We have this sign of weakness. That's a clean break because we didn't just liquidity grab, we came back down and took it. Could be clear on the 15-minute. Nice. A lot clearer, a lot cleaner break on the 15. Validating the sign of weakness. This was another sign of weakness. Come on. I hate when TradingView does this. Lovely. Cool. Sign of weakness. Scheme is now somewhat complete. We go into phase E. Boom. And we absolutely died from there to present time. That is distro 1 and how we anticipated the demise of BTC. Now, here we actually took liquidity from a low. We set some levels that we could see, that we'd want to see BTC come higher up. Now, we took liquidity from this low. However, we have printed a set of equal lows, leaving liquidity that hasn't taken it. Yeah, that is the equal lows. We've taken liquidity from this high, this low, sorry, but we have in the process printed equal lows, leaving liquidity to potentially come and get grabbed, to potentially see a move lower. Let's see where I'd like it, where potentially it could become to wick to fulfillment, potentially sitting around the 25k region. Yeah, I do see it coming into the 27 to 35k region is where I see BTC coming. This would be my point of my area of interest. We'll see from there. However, we have just showed a bit of unwillingness after this liquidity grab from this low. So potentially, I would want to see maybe this, possibly I would like to see this high get taken before we see a move up. However, more, I would prefer to see either not that high, don't want that high taken, this high, because this was the leg that took liquidity. I would want to see this high taken before we see a potential move back up to where we was. Yeah, more can be found on Wyckoff with our parent company, George Mortimer, or just generally online. Now, as we briefly spoke about, the diminishing volume of balls in the market. Just that extra confluence on the schematic. This will be posted in the Telegram group, just for you to refer back to. But yeah, thanks for listening, guys, and have a good trading week. More to come. Yeah, cheers, guys.